Welcome to USMK Insights, where we focus on US stock technical analysis. Using charts, trends, and price action will help you understand the market rhythm and make informed buy and sell decisions. Alright, hit subscribe and let's begin today's learning journey. Today we will continue discussing reversal patterns. The pattern for today is called Three Black Crows. It's also known as dark cloud cover. This reversal pattern is very common in the market and it's highly powerful. Whenever you see it, be extremely cautious. As we discussed earlier, when a trend reverses, there's always a transition phase. That transition is the reversal pattern. Let's look at an example. Here, we see a strong bullish rally. The price rises for 5 or 6 consecutive days. Then there's some consolidation at the top. Next, at this high level, 3 consecutive bearish candles appear. This pattern is a sequence of 3 bearish candles. For these candles, the bigger the better, but generally medium-sized is enough. That's sufficient. After a strong rally, if you see 3 straight bearish candles at the top, that's a 3 black crows. This is a very powerful reversal pattern. It signals a major reversal. Earlier, we talked about patterns like shooting star, doji, or engulfing. Those involve only 1 or 2 candlesticks, usually 2 or 3 candlestick combinations. They need confirmation from later candles to be verified, to be confirmed. But with 3 black crows, it's very common and can directly reverse the current trend. Let's look at this case. Here's an example. Before this, there was a strong rally. The upward momentum was very strong. It even broke through a resistance level. At this point, many may wonder, has the trend reversed? Will it keep moving higher? Yes, in the short term, the trend is still upward, but it hasn't really made a new high beyond the previous peak. Instead, at this level, 3 or 4 consecutive candles appeared, and these were all bearish candles. At this point, it becomes clear that previously many people kept pushing for new highs. The price kept rising, but on this day, we could clearly feel bullish momentum was fading at this level. After this candle formed, the next rally failed to break a new high. It just couldn't move higher. No new highs were made. It spiked, then pulled back. This confirms even more that bullish buying is drying up. Buyers are running out of steam. Bullish momentum is rapidly deteriorating. Then another 1 or 2 bearish candles appear. There's even another bearish candle after that. 3 in a row is enough. 3 consecutive bearish candles at this point. And these bearish candles do what? They break below the previous support level, even undercutting the earlier bullish candle and the gap support. Here it's clear to see bearish strength is rapidly increasing. At these highs, the appearance of 3 black crows shows bullish momentum has faded. When this pattern forms at the top, the reversal usually leads to a sharp drop. After 3 black crows, prices often fall fast. So once you see this reversal, it's time to consider short positions. You can open shorts right at this level. If you bought at lower levels and hold a long position, when 3 black crows appear, if you see 3 consecutive bearish candles, they may not always look perfect. Some may be longer, some may be shorter, but this is a clear warning. It means the bears have taken control of the market. Bears are now leading the trend, so at this point, stay bearish. Right here, you should be looking for short trades. Isn't that right? This setup is very distinctive. It's different from the doji or engulfing patterns, which need more confirmation. But once 3 black crows appear, we can directly call the start of a downtrend. Get ready to short quickly. It's a very strong signal. Are there more examples? Look here. There's another one. Price rallied all the way up, then at this level, 3 clear bearish candles appeared again. In between there's doji, so it's not a textbook example. Usually a small bearish candle here is enough. But since the first bearish candle was big, the second candle showed some consolidation, then another medium bearish candle followed. This tells us the prior uptrend has ended. This is also very common. Sometimes one candle in the pattern may not be perfect, Maybe a small bearish or small bullish candle instead of a standard medium bearish candle, but the signal is still clear. Or a small candle. Doesn't have to be perfectly bearish. This is a variant of three black crows, or if you could call it an irregular form, but the meaning is the same. Understand? So you can clearly see strong bulls push the price up. Bullish momentum continues until sideways action at the top. Then a balance of bulls and bears followed by bears taking over, driving the price down. Bearish momentum takes control. After that, the price keeps falling with small rebounds, then new lows. This is a typical three black crows pattern. This pattern reversed the previous bullish trend. Bears have now taken control of the market. The price is likely to keep dropping from here. It usually continues downward. After correction here, we notice at this point, there's a similar pattern called the three white soldiers. Three bullish candles at the bottom. At lows, they are called three white soldiers. At highs, three bearish candles are three black crows. They are mirror images. Three white soldiers is a bullish pattern. Three black crows signals selling and reversal. It marks a shift from bull to bear. This shorting opportunity appears at the top with three black crows. It confirms the start of a bear trend. Now let's keep watching. Here, after three bullish candles, the price keeps rising. At the top, there's a very strong bullish candle, a medium or even large bullish candle. So in this rally, a big bullish candle at the high makes people think the uptrend will continue. Many believe the trend will keep going up from here. Will it? Maybe not. If you ignore the next few candles and only look at the left side, you wouldn't see the coming drop. Just by looking left, it seems like a strong uptrend, a powerful bull trend. There are four bullish candles in a row. On the last day, it's still a large bullish candle. Bullish momentum is strong and clear. One, two, three, four bullish candles. On the fourth, it's a big bullish candle. Bull strength keeps building. Momentum is reinforced. That's the situation, right? So when will the price actually start to fall? Here, it's not a textbook three black crows, but you can see there's a similar setup here. Take a look. You see it here too, right? Another example. So the meaning is similar, even if the pattern isn't perfect. At this level, there was a strong bullish run. Momentum kept building up. Then a large bearish candle appeared. The market consolidated. Before this, in this zone, at these highs, all you could say was that the uptrend was losing strength. The bullish trend was weakening at this level. Because of the sideways consolidation, you couldn't be sure yet. If you cut off the chart here and look only to the left up to this point, at the top, you could only say bullish strength was fading because of the candlestick pattern, right? Only when three black crows appear afterward with a similar bearish sequence, do we know bears have taken control. Then the transition is complete from strong bulls to a balance of bulls and bears, even matched. Either side can win yet. At this stage, it's unclear if the market will go up or down. We just don't know, right? We can't say for sure yet. Will it go higher or lower? Without the next candles, you can't know. At this stage, could you have guessed the direction? You couldn't. You just wouldn't know. All you could say is the uptrend is weakening here. A period of consolidation begins. The market goes sideways. Finally, when several bearish candles appear with a sequence of declines, similar to the three black rows pattern, right? Now you can clearly see bears are in charge. They are leading the market lower. So you can see the transition from strong bulls to balance to strong bears. Strong bears mean the downtrend will continue. The downtrend is established here. The bearish move is about to unfold. So when you spot the three black crows reversal, at that point, you can open a short position immediately. If you were long from the bottom, sell and exit here. Get out quickly at this level. Exit right away. Understand? Your short entry should be right as three black rows form and the downtrend starts. Jump in and follow the bears. Ride the downtrend boldly. Open your short position here and hold on. This is your opportunity. That's where your big profits come from. It's really that simple. Typically, the three black crows pattern works best after a clear uptrend. It's most effective when it appears after strong rally. Once you see three black crows, it's a great shorting opportunity if this happens in a sideways market. For example, here, during a consolidation, the pattern can still work. What's the effect? It still works, right? Say the market consolidates, then suddenly drops with three consecutive bearish candles. If it breaks below key support levels, after that, the trend continues downward, so the bearish trend gets stronger. This pattern is still very powerful, not just in an uptrend, but also during consolidation. Once support breaks and the three bearish candles appear, the three black crows signal triggers. If support is lost, the main level, the trend will keep heading down. After a long rally, the drop can be steep. There's a lot room to fall. The higher it rolls, the further it can drop. When a reversal happens, there's plenty of profit potential, room for gains. That's why the three black crows is so important. Also, if you combine this pattern with the KDJ indicator, you get even better results. How do you do it? Let's see. Three black crows form here, and the KDJ indicator shows a bearish crossover. Sometimes KDJ even turns bearish before the pattern. The reversal shows up even earlier here. It's already visible, so once the reversal pattern forms, KDJ can clearly confirm the trend. The trend is set. After that, the price continues lower. So when do you take profit and close the position? When KDJ shifts from bearish to bullish. That's a full cycle. So short when the pattern forms and then close the trade to lock in your profit. It's the same for this pattern. Once three black crows appear after the pattern, open a short position here. Then a bearish crossover forms. This gives another good chance to reduce your position. The next 2 days also provide good opportunities to take profits on your shorts. Here, the bearish crossover is clear. After that, the price drops until a bullish crossover. That's a great way to capture the trend. This is an effective swing trading strategy. So, after three black crows, watch for the bearish to bullish KDJ cycle. This whole bearish to bullish phase is your swing trade window. The whole move is your opportunity to ride the trend. That's the opportunity you get from the three black crows pattern. With this reversal setup, you can capture big trend moves and major swings. That's all for today's session. Study the three black crows pattern carefully. It's worth learning in detail. See you in the next video.